Thank you.
Yeah. Thank you. Cheers.
Now, a lot of crystal ball gazing goes on in the real estate market, but our next guest is more qualified to do it than most. Michael Yardney has been voted Australia's leading property advisor, and with his team at Metropole has been involved in more than $2 billion worth of property transactions on behalf of clients. Michael joins us now from Melbourne to share his predictions for the major trends that will define property investing in 2018. Michael, welcome to you. Thanks for joining us.
Hi Sophie, hi James.
Good to have you back, Michael. Now, we know that you are the man with the crystal ball to be able to look in, and we followed your predictions last year. Can you tell us a little bit about what's coming up and what confusing messages are in the media at the moment?
Well, I think it's going to be a very, very different year in 2018 than 2017. 2017 started with a bang and everyone was very excited, but 2018 is starting with some uncertainty. There's lots of mixed messages, and James and Sophie, there's now fake news with real estate as well. Currently running around Australia telling anyone who wants to listen, there's Harry Dent, sorry I had a mental blank for a sec. Harry Dent is telling us we're about to hit Armageddon and we're going to have the worst recession since the Great Depression. But at this time when there's uncertainty, there are mixed messages. Last year it was all positive, this time there's positive and negative, and that's confusing people. And when people get a bit confused, they seem to sit on the sidelines and a bit worried.
Sometimes it's a little bit of the pendulum, isn't it, where it goes the other way, and that maybe brings that doom and gloom, but perhaps it's more of a settling of the market, which you spoke about last year coming into 18.
Well, I think this year is going to be a year of lower capital growth, and if we've got time, we'll happily talk about Australia and go around Australia. But I think at the end of the year, the value of your home and mine is going to be worth more than it is today, but only a little bit more if it's located in one of our big capital cities. So 2018 is a year of just going in first and second gear, not in fifth gear like Sydney did a couple of years ago.
Yeah, now, so your first prediction was that there is going to be some confusing and mixed messages in the media. Your second prediction is in line with pretty much everybody else that's saying the RBA is unlikely to be lifting rates, and but you also feel that APRA is unlikely to tighten things further as well.
Well, Sophie, real estate is a game of finance with some property, some houses thrown in the middle, because what you and I can borrow for our homes or our investments, how much money we earn, what the interest rates we pay, really will decide whether we can buy or upgrade our home or move. And so really it has a lot to do with finance. And I believe this year the RBA isn't going to increase interest rates. There was a bit of concern they may, but only last week Philip Lowe, the Governor of the Reserve Bank, came out and said we don't have to go lockstep with the United States. What caused the ructions in the stock market a couple of weeks ago was concern or certainty that the Federal Bank in America is going to raise interest rates. And so some people were worried that was going to happen here. But the RBA said no, not necessary. But lately, APRA, the Australian Prudential Regulation Authority, has tightened the screws and made lending from banks much harder. So I think they've done their job now. They've slowed down the boom in Sydney and Melbourne in particular. So they're probably just going to sit on the sidelines and just wait to see how things go. So I think finance will be much the same, hard for some, difficult for some who can't prove serviceability, and for others who've had a good savings record and who aren't spending more than they earn, they'll still be able to get home loans.
Another push is, of course, population growth, and we know that with the changing mining market, particularly on over in Perth and Western Australia, that the eastern side is getting still, really big push with population growth, mainly Sydney and Melbourne.
Very much so, and that's one of the big drivers of our housing markets. Interestingly, it's not just population growth, it's household formation, how many households we are forming. And at the moment, a lot of our population growth is from immigration. 55% of our population growth is from immigration. And people coming in are coming in at household formation age. And interestingly, they're coming in because they've got jobs, because they've got the ability to earn, pay tax, buy homes. The other thing is there's more one and two people households, and we're living longer. So even for the same number of people, we need more homes. So that's another one of the drivers, another one of the trends that's going to help underpin our property markets.
Now, you're also predicting that there's going to be a flight to quality assets, and that A-grade homes are really going to outperform the more sort of average run-of-the-mill market.
Very much so, Sophie, because last year and the year before, particularly in the hot markets, people had the fear of missing out, and they would buy anything just to get in the market and not get left behind. So they bought on main roads, they bought in secondary locations, they bought backing onto railway lines. But now there's more choice because there's lots of properties but fewer buyers. So you're right, a flight to quality. They're only going to buy good homes and what I call the investment grade properties, and they're still selling, and they're still selling well at auction. I've just been sitting here watching some of the great homes that the previous guests were showing. They were fantastic. They're going to sell, as you said, but the secondary ones are going to languish.
I'm wondering, you also talk about, Michael, that some buyers and investors are tending to sit on the sidelines a little bit, maybe because of this mixed messages in the media and not sure what's going on at the moment.
That's one thing, James, and the other is they're waiting to see when the market bottoms. They know that there's not going to be a crash in Sydney and Melbourne. In Perth, they're wondering, is it time yet to get in? In other areas, similarly, they're waiting to see. And you'll never know, and the only time you will know is when the auction clearance rates are reported as being high and prices have gone up and rents have gone up and they've missed the bottom. So my suggestion is, don't try and time the market. When you're personally ready, when it's the right circumstances for you to upgrade or downgrade your home, or if it's the right time to buy an investment and you've got the finance, take action. And at the moment, when there are fewer buyers there, there's good choices, James.
All right, can we just have a look around the major capitals now, and can you let us know how you think they'll be performing this time next year? What do you think will unfold across 2018 around the country?
Well, you gave me such a good introduction and said I've got a good crystal ball. No one really knows.
Can you bring it up now and have a look in it? Oh,
I think we've just lost Michael. We've just lost the feed.
Oh, there he is.
No, he's back. There we go.
Sorry, Michael,
Here
he's
I
had a
am.
technical hitch. We see you again. Keep talking. Show us that crystal ball.
Sure, I didn't go anywhere, but having said that, really what it's about is what's going to affect the property markets, and we've already said that probably not interest rates and probably not finance. If there's any unknowns overseas, that may affect us, but if none of that happens, I believe the top performing market in Australia in 2018 will be Melbourne. But it'll probably only go up 3 or 4% a year over this year, and that's the median prices. Some locations will do better than others. Brisbane's going to have its turn in the sun also and probably do much the same. Sydney's going to grow a little bit less. Hobart, which was the top performing market last year, was very much driven by speculators trying to chase the next hotspot. But over the years we've found this year's hotspot is next year's not spot. Interestingly, there was only 5,000 sales in Hobart last year. Sydney gets that in just over a month. So the concept is that that was driven by investors, probably not going to happen as much this year. Perth is coming near the bottom but hasn't bottomed out yet. Canberra's also going to do very well if they don't have too much fuss in what's happening in the government. There's good fundamentals in the Canberra market, and Darwin is probably going to again drop a bit more. And the last capital city is really Adelaide, which is just chugging along. There's not a lot of growth drivers there. But within each of those cities, there are some areas that outperform and some that underperform. I guess that's the way you have averages. So if you're looking to buy a home, I think 2018 is going to be a great year. And don't try and time it too much. If you're looking for investment, now's the time to be cautious and actually very, very carefully select your property.
How cautious should you be? Will you miss out if you sit on the fence for too long, this one?
Well, I think by cautious I mean you can't just buy any property and hope in 2 years' time it's going to go up in value. So I look at investment grade properties. I start from the top and work down. So if I look at which state's going to do well. So I'm looking forward rather than what happened behind in the rear vision mirror. So where areas are going to have good economic growth and population growth, and Sydney and Melbourne are the two big super cities. They were the words used by Philip Lowe, the Reserve Bank governor. We're international cities, and that's got strong economic growth, population growth, jobs growth, and that creates the ability to own properties because you can borrow more. Then within each of the states that you're wanting to buy, and in those states that are going to have good economic growth, you look for suburbs as an investor where people have got more affordable affordability, not because the prices are cheap, but because they've got higher disposable income. They're the ones who can buy new houses, new cars, big TVs. So I'm looking for areas where people can afford to, but are prepared to pay extra to live, homeowners, and that's a great place to think of as an investor. So investors shouldn't buy investment stock, they should buy good owner-occupier stock that will always be bought by owner-occupiers. Then within every suburb, there are good locations, there are nice areas, and ones you wouldn't want to buy as well. And then you buy the right property in that location, and right down the bottom is price. You make your money when you buy, not because you buy cheaply, but because you buy the right property as an investor that'll be in strong demand in the future.
Great advice. Thank you so much, Michael Yardney. We look forward to having you on the show again soon.
My pleasure.
After the break, we head back to Adelaide for our next live auction.